have no indicators and none of that BS. So, all right, so let's get started. So what I'm gonna do is I'm gonna go to my Discord. Yeah, it's good, Howie. All right. So I've been live trading in my Discord like every day last week. So there's actually not a lot to go over because most of my alerts were in voice. I don't even know if I alerted anything. I literally just did voice. I was live trading all week. I know that's alert updates. Alright, let's see if I got anything. Alright, so on the 10th, okay, this is the 10th. What I said is, I said, have these drawn on my chart for today, looking for plays off both. And you can see right here, we have this fair value gap and this fair value gap. And a lot of times when I don't know the bias, like for the day, if I don't see clear liquidity, what happens is I look for fair value gaps in like the 15-second or the 15-minute or 1 hour, and I'll base my plays off of that. So my thought process is either these could be kind of drawn, these could both be the drawn liquidity, and then when we do hit them, then I'll look for like a short setup off this or a long setup off this. So if you go to the 10th real quick, this is the XY. Let me just quickly go to this chart real quick. And I do trade ES, which is SPY. For you guys who don't know, this is literally just SPY. Alright, I think it was in the 1 hour. Alright, so it was right here, okay? You can see I had this drawn, and then I had this drawn. And what ended up happening was we never actually hit this for an entry, okay? So we never hit this for a long entry. If we draw the fib from here to here, we retrace into the discount array. And again, for you guys who are new and don't know what ICT is, this might be hard to understand, but basically the discount is under the 0.5. That's where we went along. Anywhere under 0.5 is where algorithms get in long. But you can see what happens when you hit the zone. We hit the zone and we reject, boom. And at this point in time, I was kind of leaning bullish, but I wasn't sure. And my thought process is we're going to do something like this. So bounce and then boom right there. But what ended up happening is when we got to this, we just rejected. We never ended up hitting this, and then we just ripped, okay, to buy side, okay? And in a situation like this where I don't completely know what the bias is, you will not get wrecked because you're not just going to long guessing that we're going to go here, because that might not be the case, okay? Your goal is to wait till we get to one of these zones and then make a play off that. So we get to the zone, okay, we get to this fair value gap. It's also a breaker block, as you can see, which is why I liked it a lot. It's a breaker. We end up rejecting it. And I'm just going to go to the 5-minute and scroll back to that time. It was a 5-minute fair value gap as well. And as you can see, we did go a little over it, but obviously wouldn't have gotten stopped because your stop would be above the order block, which is this green candle before the down move. See this green candle before the down move. That's an order block for you guys who don't know. This is a stop loss. So what ended up happening was we ended up rejecting it, okay? And some people they like to wait for confirmation, so they're not just gonna slap short here. But if you did not, let's say you are bullish for the day, okay? And let's say you didn't get an entry off here. Well, once you see us reject the zone, okay? When I drew these zones, I did not have all of this yet, okay? So when I saw this, I saw this fair value gap. I saw that fair value gap, and what I saw was this would probably be a counter trend scalp to these lows down here, and then once I saw this, I was bullish, okay? Why was I bullish after seeing this? Well, look at this candle, boom, and then look at this candle. That's a huge shift in structure, okay? So we break this last lower high, And because I was already leaning towards being bullish because we already hit the discount array, you kind of see this gives me confirmation to go long. And what happens is we just broke this with huge energy. You reject this fair value gap. And then that's when I started looking for a long in this fair value gap. And if you don't know what inducement is, the inducement is basically going under an old low and then bouncing out of a fair value gap. And we ended up bouncing out of this fair value gap after inducing. But let's say you don't want to, you want to wait for confirmation, okay? So let's say you do not want to enter the zone. You want to wait for a confirmation setup. Well, if you look right here, just X this out. This is your confirmation setup right here, okay? Boom. There's a fair value gap right there we bounce out of, and then there's a 5-minute order block right here, this black line. And again, this order block is drawn from this down candle before that move. So you can see we have confirmation off this setup. And here we don't need a market structure shift. So we already know now that we bounce off this fair value gap, we're still bullish because we already hit discount array. And in this case, you don't need the market structure shift. So knowing when you don't need a market structure shift is important. This is just one of those plays where you don't need it because we already filled this fair value gap, okay? So, and we already induced under this. So the chances of us going down back below this low is very unlikely. And yeah, this is easy to understand in hindsight, but it can definitely be hard in live time. But you just gotta make sure you're looking at the higher time frame. So if you like check the higher time frame, one thing I like to look for is that we hit the discount array. Yes, we did, and we clearly got a shift on the 1 hourly too. So we get this giant green candle over this last lower high. Counter trend scalp off of this fair value gap, this 1 hour fair value gap. But knowing that the buys is still bullish, not that we hit the discount array and we bounce out this, it was also an order block right here. And for you guys who know, I know Royal Market Builder, he draws these as well. I'm not sure what he calls them. I don't know if he calls them order blocks or not. But we hit the discount array, you bounce off this order block, so the target would be this high. And then that's when you look for your confirmation entry, which we obviously saw on the 5-minute right here off this OB and this fair value gap. So that was one of the plays that I was that I took that day, and it all started off with I go into the day, don't know the bias, okay? So even ICT says that sometimes. He doesn't know the bias going into the day. He needs to wait till structure kind of balances out, and what happens is you clearly see a respect in the zone, and then you see this market structure shift up. So that as soon as I get some market structure shift up, I'm bullish, but I also know there's a fair value gap ahead that we're probably going to likely reject. And the reason why I like this one and not this one was because on the smaller time frame, this was kind of already used and there was really no good fair value gap the smaller time frame. As you can see though, we did reject it. So you can see you go to this fair value gap, we went about 10 points off of it. So you can see we get into it, we have a shooter candle, and then we end up rebouncing off this fair value gap right here. So we end up bouncing off this fair value gap, and then that was your other long entry, by the way. So let's say you missed a one down here, you know we still hit this high. This would be one of your other long entries, and this is actually 7. This is a 7 a.m. So it happened actually right before Killzone started. And then here's the market open. And like just let's say you weren't up at 7, okay? But let's say you don't know where the market's going for the day. If you see this, then you know market open should be bullish, or we should end up panning out bullish for the day because we bounce out this fair value gap after this market structure shift right here. We still haven't hit the highs from down this bounce. And you can kind of see market open was kind of very messy. So we had this, and then finally we break out. But I think a lot of people are like, oh, I can't trade market open, it's too volatile. Well, make sure to have, if you're looking at SPY, stop looking at SPY because SPY won't tell you anything. You need to be looking at ES. You need to be looking at the overnight moves. Like you will not see this on SPY this clearly, okay? So like knowing that we just bounced out of the fair value gap, we still have to hit this high is very important. Definitely be using ES if you aren't already. But this is kind of, even though probably a lot of retail probably got chopped at open, and probably a lot of retailers like, oh, I see a red candle down. Then they're gonna be like, oh, I'm gonna go short because it's red candle down. But for guys who are looking at ES, this is literally just a normal red candle, an uptrend, okay, after knowing that we have to hit this high. So I think it's very important to watch ES rather than SPY for you guys who don't already do that. I did make a video on my channel on why you should do that, but and like also another thing is like if you are playing options, which I know people do options, like let's say I want to shorten the zone, well you just buy puts when you get in the zone, and a lot of people are like, oh, it's not SPY, I can't trade it, but it's literally the same exact thing. So when we get in the zone, you just buy puts and SPY, but instead of watching SPY, you just watch ES. So there was that. I do see a lot of new faces in here. The only person I know personally is Howie. He's in my Discord. But for you guys, I don't think I've seen you yet. So I'm sure there's some of you who have no idea what ICT is. I do have a YouTube that explains ICT, but it's basically fair value gaps, order blocks. You can obviously see I don't use any EMAs or any of that BS. That's not really how the market's respected, but obviously you can be profitable even doing that. But for you guys new, I would definitely recommend watching ICT. Again, I don't see one person in here that's been here for my ICT stuff in the past, so I'm just gonna put that out there real quick. So if we go back to my alerts, let's see if I have one more. So I did live trade a lot, as I said to the guys earlier, which I didn't really alert. And I said exactly while I was watching the zone, we ended up rejecting huge from it. Okay, so this was a play I took in live voice, okay? And I didn't alert this in my channel, but I alerted it in live voice. I said I took it. So let me just go to the 1 minute real quick and show you guys this. This is one of those plays that you really have to be disciplined and have good psychology. Hopefully I can find it. I think this was at 11 o'clock, January 10th. Okay, so it was over here. Alright, it was right here. So, okay, this is kind of what I was saying before. So, when I said that I wanted to long because we hit discount, so I already have this marked up. We hit discount, okay? And what happened, like on the 5 minute, as I just showed you guys in the 5 minute, let me see if I can pull this up in the 5 minute as well. Okay, I can't do it actually. I gotta go all the way back. Alright, so on the 5 minute, as we saw, this was your long entry, okay? So this black line I have marked was the 5 minute order block. And what I did in voice is, in voice chat, I still knew we were looking for longs, but what I did in voice chat was I said I'm shorting right here, okay? Why did I say that? Well, first of all, you have your market structure shift, and let me just delete all this stuff. You have your market structure shift down, so you can see we obviously break structure here. And as soon as we hit the market structure shift down, you can see huge displacement. This is really good displacement. There's got to be a lot of sell orders sitting here from this dump. So likely the algos will trade back into this fair value cap and then sell off again. So what I did is I took a short here. And what happened is I ended up getting stopped at break even, okay? And this is kind of where the psychology happens. So this is a hard psychological game, and you have to manage your risk accordingly. And in this situation, some people they would set up their entry like this, okay? So they get in here, and this would be the stop loss. They wouldn't move the stop to break even until maybe they get up to 1R. But you can see this is 3R. My take profit it's 2R, so it would be right here, which obviously didn't hit. But my stop loss probably would have been a little tighter to the swing low, and you can see it went well past 2R. So what I look for is 5 to 10 points of play. Obviously this went about 10, so I would have been already out. But in this situation, what I do is I don't really draw this box, which you should, but people do. Your stop would be above here. And what happened is I got stopped to break even. I know some people who I was live trading with, they stayed in, And it's just, when I got stopped, I saw this. I'm like, well, I'm glad I got stopped, but we're still probably going to reject. I ended up getting off live voice, and I said my plan is I still think we're going down, and I think we're going to rebalance. This was a 5-minute fair value gap at the time. I think we're going to bounce out of this 5-minute fair value gap. That's what happened. We bounced off of it, but the reason for me going short here was, one, I was long biased, but I knew if we still had to hit the high, which was up here, then algos and smart money would want to get in down here at this fair value gap. Okay, if there is no fair value gap here, I would not have guessed that we were going down here. Okay, so I just set it because I knew there's a 5-minute fair value gap here, and I saw there's a market structure shift here and a fair value gap here. So I ended up taking the short. I got stopped to break even because that was my risk at the time. I was up about, I think I entered like right here from the first hand of the zone. I was up 3 points. As soon as I'm up 3 points, every rule I put my stop to break even. But you can see why were we chopping around in this fair value gap? Well, you can see when we went up here, we had a fair value gap in itself right when we went up there. So if you notice, we were kind of ping-ponging between these two fair value gaps. So there's a ton of buy orders here, a ton of sell orders here. But eventually, at the end of the day, if smart money truly wants to get in, well, they'll move price down here, and that's what happened. And it was obviously more the algos that did that. But you can see at the end of the day, the smart money algos who want to get in, it moves price down here, but with still respecting this fair value gap. So you can see, like, we get into this fair value gap, we bounce, we hit this internal high, we go in the fair value gap again, we bounce, we hit this internal high, and then we go in it again, which we go below equal lows, we bounce, and then we hit this internal high right here. Okay, so this ended up working 3 times. Obviously, you're not supposed to take a fair value gap 3 times. This is just messy price action. But at the end of the day, we end up rejecting, and we went into the zone, then we bounced and did what I expected. But this is one of those plays where you have to have either your stop loss right here, or you just have to accept getting stopped to break even though it might work again. And if you did get stopped to break even and you re-entered again, you might have got stopped again if you put your thing over this high. So it's just one of those battles where you have to place mind games with you, okay? But it ends up working in the end, and that's definitely something I still struggle with, because there's plays where I'll get stopped to break even, but then I'll just go my direction. So that's just something that you definitely have to make your own rules about. But you can see why I got in short. We had this fair value gap down here. This was our confirmation entry to go long, and we had the market structure shift, and we had the fair value gap up here. So that was why I kind of shorted in live entry. This was my CPI prediction. As you know, chart sets itself up for the news. Let me just go to ESH real quick. I was being very careful that week because I knew CPI was that week, but CPI, what I predicted was, I saw this fair value gap and I was like, oh, this fair value gap looks very, very interesting. This is just one of those fair value gaps that's very, very clean. Okay, it's also a fair value gap right here. It's like a balanced price range area, and you can see when I predicted this, what I thought we were just rejecting, go way lower. We did end up rejecting it, so you can see we end up rejecting off this wick. This was CPI, and we went about 50 points off it. So we only went 50 points off my prediction, which versus I thought we were going to go down a little more, which obviously never happened. But nonetheless, you still would have been green if you kind of took that. I know a couple of guys do trade CPI. I personally wouldn't recommend it, but one of my buddies, he was up probably 150 points on the day, and his first play was taking CPI for 50 points, and he just scalped. The rest of the day. But you kind of see another scenario where chart sets itself up before the news. The reason why I never predicted down then up, because if you look down, what do you see? There's no fair value gap. There's no good fair value gaps over here. But if you look left, there's just a very, very, very clean fair value gap right here. So the chances of us not rejecting that is pretty dim. I guarantee you, if CPI was 6.8, I think, or 6.5, one of those, it was the same as whatever was estimated. I guarantee you, if it was lower than estimated, we still would have rejected this. Even if it was higher than estimated, we probably still would have rejected this. So we still would have rejected this in some sense. it's very hard not to, especially a clean zone like this. And let's say CPI was way higher than, like way lower than we expected. Then we would have respected this zone, and not only would we have respected this zone, but we would have respected it in a news event. Okay, so this is the next zone that I'm currently watching for short. It's another fair value gap. There's a mitigation block right here, which is this green candle before a move. They end up breaking down. This is a mitigation block. This is the next short I'm watching for this week. And what I do is I don't short blindly, but I go on the 5 minute, even sometimes the 1 minute, and I look for short entries off this 4 hour fair value gap. So that's kind of what I'm watching for this week. If you guys have any questions, let me know. I'll go over this real quick. This is my other alert. So I was in live voice. I alerted this long. This was on January 12th. Let me just go over this real quickly. This is a pretty good play. Trying to remember what it was. I think it was on the 1 minute. Yeah, so it's right here. So as you can see, boom, there's a fair value gap here. What I did is I alerted this long, and I said I cut most at this high. You can clearly see what happened. We hit this high. And for you guys who haven't watched my displacement videos on YouTube, what happens is if we do not displace over highs and lows, usually we end up reversing. So you can see we do not displace over this high and low. And you know that in live time, as soon as you see like this bearish engulfing handle after we hit this high, then my target would be this low again. And you can see, if I bring it back to the premium discount idea, we end up hitting this discount array, this 0.5. So I took this entry, I said in live voice, I'm slapping this, and we end up bouncing right away. And why do I like this? Well, first of all, it's a fair value gap. We have a market structure shift right here, and it's very energetic. We get huge displacement, so we get huge displacement over this high. Unlike over this high, we do not get displacement over. So I ended up bouncing that. I got out for about 10 points. But what do you notice? We have another fair value gap below, which sets up for a possible nice inducement, and it's also the 0.705, okay, which is the ICT's optimal trade entry. So you hold this 0.705, and we hold this fair value gap. I never ended up taking this one, but I said this is also a good long spot. I know someone did take it. It was kind of funny because he had his we could hear order filled in the background. I was like, this isn't a bad long spot, but I never ended up taking myself because I wanted to be done for the day, because who wants to trade this? I want to trade this because this is very good price action, when some people be like, oh, this price action is bad. But this is very good price action. As soon as you see this displacement, that's when it's like retracement trader's dream right here, okay? You know that we got to bounce after having this. So we ended up getting this entry. It went pretty good. And then we end up just holding this for a value gap. And we end up going below this low again. I would call this ugly. Okay, the reason being is we had these equal highs above here, which is buy side liquidity. And I thought we'd hit these much sooner than we did. That was my target. And I was on Twitter this whole day. And while on Twitter this whole day, I was actually calling these moves. I said what I was looking for. So if you go on my Twitter, I said I'm looking for a long in this fair value gap before it even got there. That was like the one play mentioned on my Twitter, which I don't really do that a lot on my Twitter. Just made me for Discord members. But you can see with the equal highs above here, I really wanted to hit those equal highs. And that was my target from this long, but I saw we did displace over this low. And I'm like, yeah. Usually if we do have these equal highs, usually what happens is we'll just squeeze and we'll have a giant green candle up to here. But I didn't see that happening. And I do watch a footprint chart as well, and footprint charts started to look bearish. That's whole nother thing that I kind of teach people in Discord, but I'll definitely do a lesson on those sometime. But you can see we do not displace over this high. So what does that tell me? That tells me to get out. That tells me we're probably going to go back and induce this. So inducement is basically when we break this low, okay? But then we bounce after breaking the low because it's another fair value gap. You can see people probably got induced on that. And let me just quickly go to this real quick. And what ended up happening is you can see, okay, we broke this low. You can see in the 5 minute we broke this low, but then what else happens? We also form another fair value gap in the 5 minute. We never closed above the fair value gap. We ended up rejecting it, and then we re-hit the low again. Okay, so this was kind of ugly in my opinion, but I didn't. You can obviously see with this fair value gap right here, and we ended up rejecting it. And then this is just messy in the 5 minute, but obviously in the 1 minute it was pretty clean. Let me just finish explaining my thought process. And as soon as you see this is kind of ugly. Why? Because once you bounce off the 0.705, okay, you really want to see a push up to this buy side. And the fact that we just rejected randomly here was kind of like, why did we just reject there? I think this was actually a 3 minute fair value gap if I remember correctly, which is why. But this should have, honestly, in better price action, this would have just bounced here, hit the high. Okay, so this was unnecessary. Obviously, if you took this trade, your stop loss, again, it's below the swing low. So for you guys who want to place proper stop losses, you never would have gotten stopped out. And then also on the footprint chart, this was a pretty stacked area right here, and I mentioned that in my Discord. But I was like, on my Twitter, I said this is probably not a good time to trade because, one, this is also like a fair value gap, okay? And it's also, there's an order block right here, okay? And this, it was stacked in a footprint chart here. It was stacked with a bunch of sellers. So I was like, yeah, there's no way we're not making it past this easily. But at the same time, I'm like, I knew there was buy side above, which I still was pretty confident we were going to hit. So I was like, yeah, I'm just going to stay out for now. So what ended up happening was both ended up working. So we ended up rejecting this. Okay, we take this low right here. And then, again, you don't displace into this low. And then we end up reversing, okay? And look what happens. Obviously, we go up, but look what happens when you don't displace over this. Look at the lack of displacement. You can see lack of displacement, and then boom, what happens? We fall again. Okay, right here we do not go under any low. This is just a random bounce. This is just a bounce spot. Looks like probably the 0.38. But you can see like paying attention to displacement is important, and also like knowing when to not be in a trade and knowing when to be in a trade is important because. Obviously right here I was like, yeah, this is stacked with sells, but there's also buy side liquidity above, so like that's just against my rules to take. But you can see both end up breaking out in the end, and this was just ugly because the fact that we went under the 0.705 just didn't make sense to me. I thought we'd honestly just hit the high from here, but you can kind of see this was very nice in the 1 minute. I know a lot of people on Twitter, they're like, oh, this is bad price action. Nah, this is great price action. Just get in the 1 minute. I trade the 1 minute all the time. Obviously trading the 5 minute is going to be it's not for everyone trading the 1 minute, and I know trading the 5 minutes fine, but just if you start seeing price action like this on the 5 minute, like very, very choppy, go to the 1 minute and maybe paper trade it. And I know some people who are not good at the 1 minute. I would, if you don't trade the 1 minute already, I would definitely suggest paper trading it and getting used to it. But again, you're going to have 10 times of the plays on the 1 minute than you are on like the 15 minute because time is fractal. So a lot of these plays on the 15 minute that we see like once every 3 days, they happen in the 1 minute all the time. So definitely start looking the 1 minute. But that is basically all I got for now. Again, this was a nice day to trade. Other than that, I really got nothing. If there's any other questions, if you do have a question, let me know. I guess in free chat. I'll give you like 30 seconds. If not, that will end the class. If you don't have the question, you could probably just leave if you want. Unless someone has another question that they're wondering. I'm sure a few of you have no idea what ICT is, but I'll give you like 15 more seconds. Alright, so it doesn't seem like you have any questions, which is probably good because that means I probably did a good job explaining. But if you do have any questions, make sure to DM me or at me in chat, whether you're in my Discord or here. But yeah, that's going to wrap it up for tonight. So yeah, this will be recorded if you want to re-watch this. But other than that, I'll see you guys later. Peace.